Hi, welcome back. In this video, we are going to demonstrate the development of an income statement. In this particular video, we're going to do a single-step income statement. In the next video, we'll use the same information and see what this would look like if we did a multiple-step income statement. Again, if those terms are new to you, feel free to look back at the last lecture video and remind yourself what distinguishes a single step and a multiple step income statement. All right, so here we have the worksheet completed through, we actually have it through the closing entries and everything over here. And we are ready now to produce financial statements to go out to the investing public. And we have here, as you can see, there's two divisions in this company. There's a tennis division and a racquetball division. As a result, we set up account names for those the same accounts types within the two divisions. So there's two inventory accounts. There's two prepaid rent accounts. There's two showroom equipment accounts. There's two sales revenue accounts. There's two cost of goods sold accounts. One for each of the divisions. Okay? And our chore now, and of course we did the adjusting journal entries and we recorded those in the general journal, posted them to the general ledger, and we prepared an adjusted trial balance. And indeed, if you've printed already, the materials are down, which I hope you have, so you can take notes on them liberally. You will see that we actually have it through the post-closing trial balance. And so the worksheet is all done. And now our next task is go ahead and prepare the financial statements for issuance to the users of our financial statements. Here we're doing the income statement. So at this point, I want you to pause the video and go ahead and work on it and put together a single-step income statement. This will be an excellent learning experience for you. And then you can come back and watch the video and reinforce that indeed you did it correctly or learn from your mistakes. And you will also might learn something even to further enrich your understanding and cement the knowledge for the future by having done it yourself and then watch for any additional hints that I bring. All right. So I will see you in a moment. Hopefully you'll have a completed single-step income statement. If you'd like a check figure, I think the number 300,000 will help you. All right, see you in a little while. Okay, welcome back. Hopefully you are sitting with a completed income statement in front of you at this point. I've started mine. And of course, you always start the formal financial statement with a title to the financial statement. And this is for the Racket Sales Corporation, the income statement for the year ended December 31, 2024. Now keep in mind that in the real world, you would have had for the years ended December 31, 2024, 2023 and 2022, and we would have provided 3 years of comparative income statements. But of course, we would have simply carried forward the 23 and 22 statements and then added the 24 statement. So that's what we're about to do. Needless to say, you would both have those financial statements done because you did this work last year and the year before, but you would also have 3 similar worksheets for the respective 3 years that you could draw from the adjusted trial balance balances to prepare the financial statements. One thing I meant to mention in the video was, notice that here I did not do an income statement and a balance sheet, separate set of columns. The reason I did that is it's often not done. I did it in the last video for you to see how that's working. But in the real world, you quickly will learn that these are permanent accounts that go on the balance sheet, and these are temporary accounts that go on the income statement. Okay? And so I went ahead and dispensed with the extra columns. And that'll more often than not be the case. Okay, and while I have the worksheet up here, let's just start in on our income statement. There's the accounts we need. And of course, on the single step income statement, we are going to show all of the sales revenue and gains first, and then get a subtotal of total revenues and gains. And then we're going to show all the expenses and losses and get a total of those. That would be net income before income taxes, and then we'll show income tax expense and have net income. All right, so our first number of relevance is going to be sales revenue. And the sales revenue is $850,000 at the tennis division and $150,000 at the racquetball division. So with that information, that sum is $1 million. I'm sure you have that on your income statement. And so this is what it looks like. We have the section title in bold here, revenue, and then the first item, sales revenue, and there's that $1 million, which is the sum of the $850,000 at the tennis division and the $150,000 at the racquetball division. Okay, let's see what other kinds of revenues we have at the company. Come back to our schedule here. And we have interest revenue at the tennis division of $20,000 and interest revenue at the racquetball division of $5,000 for a total of $25,000. And I have that on the income statement. Interest revenue, $25,000. Back to the worksheet, and we find gain or loss on sale of investments is $30,000 in the tennis division and $0 at the racquetball division. And so that'll be a total of $30,000 in the total company for gain on investments. And if you look at the worksheet, that's the end of the revenues and gains accounts, which have those 500 numbers. That's often how we do the general ledger, is we put a number like the 500 accounts. So if you see a 500 account, and in fact that I set it up to be account 501T. 501 suggests sales revenue. T suggests tennis division. 501R is sales revenue for the racquetball division. 502 suggests interest revenue, tennis and racquetball division. 505 is gain or loss on sale of investments. My hope is that 503 and 504 would be used by other revenue items in the future, like the sales of string and maybe service revenues and all that as we grow the company. We can make as you sales and leaders, you come up with the services and the products to sell, and we accountants will make an account for it. It's very easy to do. All right, but now we've accounted for all the current sales revenues and gains accounts. Let's go to the expenses. Before that, of course, we have a total revenues and gains subtotal of $1,055,000. Notice that anytime you have a subtotal, you have a one line above it that shows what's being totaled. So the sum of the million, 25,000, and 30,000 is $1,055,000. Single line above, and then if it is a bottom line total, we might have two lines under it. But here we have another subtotal coming, and that's because we're going to have revenues minus the expenses. So there we have a section column heading called expenses. First one is cost of goods sold, and it's $388,000, which is the sum of the cost of goods sold for the tennis division, $300,000, and the racquetball division, $88,000. Next, we have selling expenses. The selling expenses at the tennis division are $65,000. The selling expenses at the racquetball division are $0. So we are not advertising our racquetball division anymore. That suggests that to me that maybe this is a line of business we may be looking to get out of. We're certainly underinvesting in it. All right, so there is where these amounts are coming from. There's the 388, there's the 65. And the next thing we have is general and administrative expenses for each division. And it's $125,000 for the tennis division and $25,000 for the racquetball division. So that sum is $150,000. Rent expense is $18,000, $12,000 at the tennis division, $6,000 at the racquetball division. Depreciation expense is $10,000. And that is $5,000 at each division. So they have pretty similar equipment. Interest expense is $12,000, $10,000 at the tennis division, and $2,000 at the racquetball division. And then the only other expenses we have left are interest expense. So there's all the expenses, and we already put the $12,000 of interest expense and the $10,000 depreciation and the $18,000 of rent and the $150,000 of general and administrative, the $65,000 of selling expenses, and the $388,000 of cost of sales. We have another subtotal here, and that subtotal is total expenses and losses of $643,000. That leads to yet another subtotal, net income before income taxes. And that is the net of the $1,055,000 minus the $643,000 equals $412,000. That's our net income before taxes. And on that, our interest expense was, if you look at the accrued amounts on the accounting worksheet via the adjusting journal entry, $100,000 and $102,000 attributable to the tennis division and $10,000 attributable to the racquetball division for $112,000. And therefore, bottom line in income is that $300,000 that I talked about as a check figure. And that's a single step income statement. Right? If anything's unclear about that, or if you had anything wrong when you worked it before the video, by all means, go back to the book, read about it, go back to the lecture video, and restudy and relearn it and learn it well. You'll do a lot of them in your career. Okay, thank you for your attention on this video. In the next video, we're going to use the same data, and we're going to see what a multiple step income statement would look like with these accounts and these balances at the end of the fiscal 2024 year. See you in that video. Thank you for your attention in this video.